Zombie companies will be going bust. Banks will be in trouble. So what happens? Well, you rescue these things. How do you rescue them? Well, you replace private sector credit with government credit, which basically means that the whole of this government borrowing thing is just spirals out of control. I think we are on the cusp of that. And once it starts rocking, I don't think it'll take terribly long for the whole system to come down.
You're watching Silver News Daily. Subscribe for more.
Did you know that the stock market could collapse under the weight of new government policies? It sounds far-fetched. But what if I told you that the incoming government's plan to hike capital gains taxes might just be the tipping point? These policies could freeze investor gains, dry up market activity, and spark a financial crisis we haven't seen in decades. You need to hear this before you make your next investment move, because the very foundation of your portfolio could be at risk. Stay tuned as we break down why this could be the most dangerous policy shift we've ever seen, and how it could destroy the economy as we know it. It's no secret that the current government has left the economy in tatters. Decades of mismanagement have led us to a fragile economic state where inflation is rampant, debt is soaring, and confidence in the system is dwindling. Alastair MacLeod, a respected economist, described it perfectly. The politicians we trusted to manage the economy have a completely different agenda from what's actually needed. Instead of sensible economic policies, they've been covering up problems with quick fixes, flooding the market with credit, and distorting statistics to hide the real extent of the damage. Take inflation, for example. They claim it's sitting at 2% or 3%. But anyone who's been paying attention to rising prices over the years knows that's a complete myth. The real figures are far worse, and a government solution. Push the problem further down the road by manipulating numbers and borrowing more money. We're looking at a situation where national debt is nearing $33 trillion, and every move the government makes seems to be adding more fuel to the fire. The cycle of economic manipulation continues, and now, with the state of the economy already in peril, we're faced with the possibility of an even worse scenario. The new government's proposed policies could accelerate this collapse, turning an already bad situation into a catastrophe. But before we dive into how these policies could destroy the stock market, let's first look at the government's dangerous pattern of economic interference and why it's been setting us up for disaster.
It's a bit of both. I mean, it's it's part ignorance, and also we must recognise that politicians have a completely different agenda from an economic agenda, and usually, I mean, a good politician will be able to lie to the electorate and get elected, and pull the trick off that once he's elected, he or she is elected, then they can manage the economy sensibly and within sensible parameters. So it'll be interesting to see whether either Trump or Harris actually do take a more responsible economic course. I mean, in the case of Harris, I mean, she would have to have advisors around her to do this, because she's a lawyer and doesn't understand economics. I mean, that's absolutely clear. But we'll have to see, if you like, the proof in the pudding will be in the eating. That's sort of a phrase in English. I don't know whether you've got the equivalent in American. So I think there's an element of that in it. But there's a huge amount of ignorance. I mean, the whole idea of governments trying to manage economic outcomes, this is something that only really started with President Hoover and then was doubled down on by FDR. Until then, the perceived wisdom was, you don't mess with the economy. Okay, if there's a recession, then basically what that means is that
So how could the new government's policies make things even worse? Well, it all starts with their approach to capital gains tax. Under the current system, investors pay lower tax rates on long-term capital gains, which encourages people to invest and hold onto their assets, fueling growth in the stock market. But the new government wants to change all that by taxing capital gains at the same rate as regular income. That means taxes could shoot up to 40%, effectively punishing investors for profiting from their hard-earned investments. This isn't just bad news for wealthy investors. It's a disaster for the entire market. When capital gains taxes rise, people hold on to their investments to avoid paying those higher rates. What happens then? The market freezes. Investors stop realizing their gains, liquidity dries up, and market activity slows to a crawl. The ripple effect is massive, with stock prices stagnating or even plummeting as fewer trades are made. According to economists, these proposed tax hikes could send shockwaves to the stock market, leading to a massive slowdown that could affect everyone, from institutional investors to small-time traders. And it doesn't stop there. This policy could also discourage investment in new businesses and innovation, further weakening an already fragile economy. But it gets worse. Some politicians are even floating the idea of taxing unrealized gains. Yes, taxing profits that you haven't even made yet. This kind of policy would be the nail in the coffin for the stock market, as it would force investors to pay taxes on gains that could evaporate with a market downturn. Imagine being taxed on something that doesn't even exist yet, unrealized profits that could disappear in the next market crash. As we move forward, we'll look at just how close the stock market is to a full-blown crisis. But first, think about this. Could this be the start of a financial disaster that none of us are ready for? Let me know your thoughts in the comments below, and don't forget to subscribe for more insights into how these policies could affect your investments.
If you like, all the dicey stuff has just got to get cleaned out. Don't stand there and do it, but just let everybody get on with it. You know, it's Schumpeter's creative destruction, if you like. The creative destruction is something that should be happening all the time, but because you've got a cycle of growth and recession in bank credit, of course, you know, the Schumpeter's idea basically comes in spades every now and then just goes away. You know, it's all about credit at the end of the day, and the availability of credit, interest rates, and so on and so forth, and the abuse of credit. And banks undoubtedly get carried away when the economy looks a bit better, and they sort of think, well, this is good, and then they start angling for market share by lowering interest rates, their lending rates below, if you like, a sensible commercial level for strategic purposes. I mean, we've known this. I mean, you can see this cycle going all the way back, but the mistake that the Keynesians made was to think that they could manage it. You can't manage it. You can't manage human nature. I mean, it's and that's really where the whole thing has gone horribly wrong. And I think, in a sense, what we now face is the end game, if you like, the end of that whole period of distortion, because distortions have been covered up, chuck credit at it, government credit if the banks won't do it. And the result is, I mean, they've had to distort the statistics. I mean, statistics about prices. I mean, as John Williams shows, the whole thing is an absolute myth, the idea that inflation is at 2-3% or whatever, and it's been a myth for so long. And anyone, in America or indeed in this country, who sort of looks at prices over a long period of time, I mean, they know they've been robbed. Basically, the statistics don't reflect the degree to which they have been robbed. And I have to say that what we are seeing in this
now. Let's talk about the real danger, how close the stock market is to collapsing under the weight of these new policies. The stock market might seem strong on the surface, but underneath it's more fragile than you might think. We've already seen hints of instability in recent years, wild swings in prices, market volatility, and investors pulling out at the first sign of trouble. So what happens when the government throws a massive tax hike into the mix? Last year, McLeod warns that governments have been distorting the true state of the economy for years. They've covered up issues with quick fixes like flooding the market with cheap credit, which has created a false sense of security. But the reality is we're walking a fine line. The moment credit tightens or confidence drops, The whole system could start unraveling. And when you introduce policies that punish investors, like these new capital gains tax hikes, it's like lighting a match in a room full of dynamite. Imagine this: with fewer incentives to sell, investors sit on their gains, liquidity dries up, and the market freezes. Zombie companies, those that survive on low-interest credit, start going bust, and banks, already strained, begin to feel the pressure. The stock market, which has been propped up by endless credit and speculative investment, starts to buckle. The fragility of the system means that any major shock, like a significant change in tax policy, could send the market into a tailspin. It's not just about investors losing confidence, it's about the entire financial structure collapsing under its own weight. And here's the scary part: we might be closer to that tipping point than anyone realizes. But before we dive into historical parallels and how similar policies have led to market collapses in the past, let me ask you, do you think the stock market can survive another hit like this? Drop your thoughts in the comments below, and don't forget to subscribe to stay informed on how these policies could shape the future of your investments. We've seen this play out before, and the results weren't pretty. Historically, whenever governments have tried to control or manipulate the economy with heavy-handed policies, the results have been disastrous. Take, for example, the policies of President Hoover, which were later doubled down on by FDR. They believed they could manage the economy through massive government intervention. And what happened? The Great Depression. Back then, similar mistakes were made: tax hikes, interference with credit markets, and attempts to control economic outcomes. These policies crippled growth and deepened the economic crisis. Today, the situation isn't all that different. The national debt is ballooning, and the proposed capital gains tax hikes threaten to stifle investment, just like back then. It's like déjà vu: governments trying to fix a broken economy by making it even harder for businesses and investors to thrive. The U.S. National Debt Database reveals a troubling trend. After decades of fiscal irresponsibility, the debt is spiraling out of control. In fact, some experts believe that once the national debt surpasses 120% of GDP, it becomes nearly impossible to avoid a financial crisis. We're already inching closer to that threshold, and these new policies might be the final push that sends the economy over the edge. If you think about it, the parallels are chilling. Both then and now, we've had governments who believed they could control complex economic systems through regulation and taxation. The result? An economy that teeters on the brink of collapse, with investors running for the exits. We've seen it happen before, and if history is any guide, we could be facing a financial disaster on a scale that few people are prepared for. But are we headed for a repeat of the past, or is there still a chance to avoid it? Let's dive into the final part, where we'll explore how bad things could really get, and whether there's any hope left for the stock market. And if you found this breakdown helpful, make sure to hit that subscribe button so you don't miss the conclusion that ties everything together.
This country is, the situation is getting worse. It's getting worse because we've got a new government which it's pledged to look after the people who work, the working person. Yeah. Well, we're all working persons. But what they actually mean is they mean that they are going to hit the wealthy with malice aforethought. They want to rob the wealthy in order to keep the whole system going. They're talking about equalizing capital gains tax with income tax, which means that capital gains tax will go up to 40%. This is going to, they won't collect anything because people will just not realize their capital gains. And I guess that Kamala Harris is sort of thinking, well, the way to deal with that is tax the gains before you even make them. I mean, this is become so economically corrupt that the whole system is on the edge of collapsing. And I go back to the debt problem. To me, I think the thing that will collapse it is the debt problem. And it's not the private sector debt problem. It's the government debt problem. And it'll be made a lot worse as the economy tanks, because not only will interest rates have to rise, but it means that zombie companies will be going bust. Banks will be in trouble. So what happens? Well, you rescue these things. How do you rescue them? Well, you replace private sector credit with government credit, which basically means that the whole of this government borrowing thing is just spirals out of control. I think we are on the cusp of that. And once it starts rocking, I don't think it'll take terribly long for the whole system to come down. And I mean, quite frankly, I don't think anyone has any interest now in allowing this system to perpetuate. It's got to the point where it's actually robbing us completely of everything we have to support it.
Now, let's get to the heart of the matter. Just how bad could things get if these new policies go into effect? The truth is, we're teetering on the edge of a financial catastrophe that could make the 2008 crisis look mild in comparison. If capital gains taxes are raised to the levels being proposed, we could see a mass exodus of investors from the stock market, locking in a cycle of frozen assets, reduced liquidity, and collapse in prices. Alas, McLeod's warning couldn't be more clear. The government's intervention in the economy has distorted the natural market cycles for too long. We're overdue for a major correction, and the weight of government debt is pushing us closer to that tipping point. As the national debt spirals out of control and interest rates inevitably rise, we'll see zombie companies, those barely hanging on thanks to cheap credit, start to go under. With fewer buyers and collapsing confidence, banks will also begin to feel the pressure. But here's the scariest part. When the stock market starts to fall, it won't be a slow decline. It could be a rapid, uncontrollable crash. The government, in trying to fix the economy by taxing unrealized gains and punishing investors, might trigger the very collapse they're trying to avoid. This isn't just speculation. This is the natural consequence of years of economic mismanagement finally coming to a head. We could be on the brink of a market-wide collapse, where major corporations go bust, millions lose their savings, and the stock market experiences a total freeze. It's a scenario that no one wants to believe could happen, but all the warning signs are there. The question now is, will these new policies push us over the edge? So where does that leave us? It's clear that if these capital gains tax hikes go through, the stock market is in serious danger. If you're an investor, now is the time to stay informed and be prepared for what's to come. And if you haven't already, subscribe to stay updated on how these policies will continue to impact your financial future. Remember, this video is not financial advice, but it's essential to understand the gravity of the situation. The decisions made today could determine whether your investments survive the storm or get wiped out in the chaos to come.